People hear this and be skeptical. What? So people are going to help me for free to get this mortgage, which I can't get.
Yeah, it's why I set on my own business at the end of 2016, because the corporate I worked for, they would charge you on application. And I'd sit there and think, oh, hold on. Imagine the lender declines that case. That client's out of pocket by 500 quid. You know,
and it goes to someone else, another 500. So they're already $1,500 down,
Yeah.
where they've saved so hard to get a deposit.
Yeah,
and then they're down $1,500 before they've even got close to your mortgage.
Welcome to the Prime Life Project podcast, a place to help you unlock your full potential, both mentally and physically, to become the best version of you.
Welcome back to an episode of the Prime Life Project podcast. I'm your host, Daniel James, and today we're going to be talking about a topic that I know stresses a lot of people out, and that is finances. With the cost of living crisis, people are struggling a lot. So I've brought in today someone that specialises in finances, especially when it comes to mortgages. So we're going to talk about mortgages as well towards the end, but more about the whole general state of affairs when it comes to cost of living and what people can do. We're going to talk about some terminology that gets thrown around that people get confused about. The whole point of this episode is basically to get you guys back in control, because for me, I feel like a lot of people are struggling when it comes to mental health. And as we're talking about off air, there's all of us here. I think finances are one of the biggest things that cause people to struggle. So I thought, what better thing to do than bring someone on that can shine some light and help guide people in the right direction. So today I'm joined by Mr. Imran Hussain. Imran, how are we?
Yeah, not bad at all. Bit nervous, but other than that, all good.
So this is your first time doing a podcast?
No, I've done podcasts before, but the first one in this type of setup.
And you've got a little bit of an audience as well.
A bit
so
of an audience
again, so people can gauge when we've recorded this. I've just finished recording the podcast with Annie. So Annie's sat in the background listening to this. So actually there's a bit of an audience here watching this. But again, it's information people need to hear. So you've helped Katie out when it comes to mortgage, which is why we've got you here, because of how well spoken you were, how you were able to actually articulate this kind of complicated world, exactly, subject matter, and you made it really, really simple, and the whole process was really good. So obviously, bigging up for your services. If anyone interested, obviously details will be in the description. But my point is, that's why I want to get you on, because you're very well articulated. You're not one of these people that uses big, crazy, fancy words, which a lot of your peers do, I think.
Yeah. And it confuses people, and that's the biggest challenge sort of in any industry that you go into, where people get confused by the terminology, the acronyms. They mean absolutely nothing for the Joe public, so you just need to simplify the process. I sort of do my role where I'm thinking in my head, I'm speaking to a toddler. Mm-hmm. Can I simplify this? Can I simplify it? And I'll always go back and think, oh, did I miss anything?
And I love the influence that's how I do it when I go talking to schools sometimes. So I'm talking to schools and some of the kids are struggling emotionally. I'm like, right, I've really got to aggress this information. In my head, I'm like, I know this information. What they say, if you can't explain it to a kid, you don't really understand it. So I see it as a bit of a challenge. So let's just imagine we're talking to a group of kids right now, because again, that's what we need. We need people to understand the basic stuff. So one of the first things I want to do is basically talk a little bit about what got you into this in the first place, because it's a bit of an interesting thing to talk about mortgages, and it's really...
a bit of a boring
subject. Yeah, people don't normally like, I want to be a mortgage person when I'm older. So what got you into this?
So whilst I was at uni, I worked in retail, and then I actually enjoy helping people. So one of my old bosses saw that in me and goes, actually, you don't want to be in retail for much longer, because sort of we've all seen what's happened with retail. There's businesses are here, businesses are gone. I always thought, oh, could I work in HR? Then I realised they don't really do much day to day.
All HR people are now just tuning off like all the hate mail.
I'm joking. I'm kidding, because there's someone I think that works in HR in the room. So that. But when it comes to helping people, my old boss just said, look, financial services, you can help people, and it's usually a stressful subject, so they need a good sounding board, because everyone's always stressed out about money. And I thought, well, actually, what do people majority of the time need, unless they're super rich? It's a mortgage. Mm-hmm. Whereas pensions and wealth planning is something for those with money. Mm-hmm. Whereas mortgages, most of the younger population will need it, and older population.
Do you feel like a lot of young people are struggling now when it comes to mortgages?
Yeah, I think there's a massive pressure on young people, anyone sort of under 40 now, because of social media scrolling. All of a sudden, someone that didn't even get one GCSE all of a sudden has got 50 houses. So there's a lot of pressure on people to buy a property, or become a homeowner, because their parents' generation may have bought a property at 18. I always wound my dad up. Dad, a pack of crisps cost the same as a house back then. It's totally different to now, where the average house is around 10 times people's average earnings, whereas back in the 80s, it was probably 2 to 3 times people's annual salaries.
So why do you think it's not gone with the times? Because this is a really interesting thing. Like, we're building all these new houses, we're doing all this stuff. Again, you've got like the government schemes to help people. But why fundamentally is it not working?
We've just not built enough. That's quite simply what's happened. The government policy is great, but actually putting it into action, we've got a massive skills shortage as well in the trades. Whenever you speak to new build companies, they're like, we can't build them quick enough. We all know that from probably leaving school 10 or 15 years ago. How many apprenticeships are available for lads that wanted to go and work in these type of trades, or girls that wanted to work in these trades. Not many. It was all very much get your GCSEs, go to college, go to university. And I'm always of the mindset that not everybody's going to be a doctor. What about the guys that want to be electricians? What about the guys and girls that want to go into, carpentry, design, and there's just not enough in schools. And I think until we solve that issue from a government policy, i.e. start training people useful skills, as I like to call them, try and find an electrician today. You're probably waiting 3 weeks until someone can come out to you. A joiner, forget about it. 6 months.
But interesting, you mentioned all that, like pretty much all self-employed things, and that's basically what your speciality is, well, helping. So why are you so fixated? Like you're a weirdo. Like why are you so fascinated by people that are self-employed? 'Cause that's a really interesting thing that I think they're the ones that struggle the most. And again, you've got 3 self-employed people in the room, which is why it's so fascinating to have you in here. Yeah. So why is it such a? Because they are the ones that I think struggle the most, because you've got to jump through, in my opinion, so many hoops.
Well, yeah, and I think that's partly because we don't generally know as self-employed people who to turn to for help. That's generally the biggest challenge for a lot of us. We speak to our accountants. They're not really mortgage advisors. They'll just sort of guide us to say, oh yeah, we can save you tax. This is what your income is. And we're thinking, yes. Then we go to get a mortgage and realise, okay, we can only borrow £5,000 because our income that we've paid tax on isn't high enough. So I think the earlier that we ask for help as self-employed people with our plans, the better it is for us long term. Like I've spoke to clients maybe 3 years ago. They've put a plan in place. They've got their accountant on board, and they're now purchasing their first home. And I think the earlier we ask for help as self-employed people, the easier it is long term.
Because I think some accountants, so my accountant, for example, he sort of said, like, are you looking to get a mortgage in the next couple of years? And I said, yes, no. And he's like, so he kind of manipulated it around. So with that, is that something that most accountants don't do? Yeah,
and we're partly to blame as self-employed people at times because we don't tell our accountants our plans. We just go in, chuck a load of receipts at them. I've been guilty of this. Say, write this off and do what you need to do. And they just work some wizardry and we think, yes, less tax to pay.
Yeah.
And off we go until the missus sees a house and goes, oh, I really love that place. Can we buy it? And we're sat there thinking, I don't know. And then all of a sudden it's squeaky bum time because your partner's in work full time. They can actually get a mortgage, and we're sat there with maybe £10,000 on our tax return thinking we can't borrow nothing.
Yeah.
And that tends to be a trend with self-employed people. No fault of their own. It's not as if...
But no one tells you when you're self-employed. No one tells you. Literally, no one tells you when you're self-employed how you're meant to do things. I remember I got stung by so many accountants, and my current accountant looked at it and he looked at my accounts for the last 5 years and went, what on earth is your accountant doing here? And literally, I can't remember how much money I was earning, but my tax was ridiculous. Yeah. He didn't explain anything to me. And it's kind of like what you're saying, using big words. I'm like, oh, yeah. Okay, I'll just pay my money and that's it. Where my account I've got now is the only one that said to me, right, this is what this is, this is what that is. And that's where, again, I sort of vibe with you because you explain it on a simple level, which is what people actually need.
And I always explain to everyone that's self-employed, always, if your plan is to purchase a home at any time within the next 10 years, just speak to your accountant and say, look, I wish to purchase a home, whether you're a sole trader or a limited company director. Your accountant can then work with you and say, okay, Imran, I'll pick on myself here. We're not going to write every single penny you earn off as expenses, as some accountants can do. What we can do is pay taxes on all the income you do earn, which allows you to borrow more money in 2 years' time, 3 years' time when you do come to purchase a home.
So you understand actually in the short term, you're going to end up paying more money.
Short term pain for long term gain.
Yeah. Again, no one explains that. Yeah. So before we go into more detail about this, I want to talk about an action plan, about what people can actually do, because we've already covered some great stuff when we just started. But I just want to cover some basic terms. Yep. Because people don't understand these terms, and these are some terms that are thrown around. They confuse people. Interest rates.
Interest rates.
What are interest rates? What do they actually mean?
What it simply means is the rate of interest you're paying on the borrowing. So if I borrow you £1, I'm going to set an interest rate at 5%. That's the rate of interest you'll pay on the pound you've borrowed. That's as simple as we need to keep it.
So when it comes to mortgages, are interest rates important?
They're not as important as people think they are, because with a mortgage, luckily enough in the UK, the way the system works is you're fixed for a period of 2 years if you have a fixed rate, 3 years or 5 years. So a couple of years ago, let's just say 12 months ago, before Trustonomics, even less than 6 months ago, interest rates, people were maybe paying 1 or 2%, 3%, happy as Larry. Interest rates now have gone up, so the new norm's like 4 or 5%. People are thinking, oh God, that's expensive, but actually rates will always change. So there's nothing you or I or anyone else in the country can do to control that. It's just the state of affairs. So I wouldn't get too hung up on what the mortgage interest rate is right now. It's actually how quick can we clear that debt off, and that's where you're in a better position.
And again, just linking us back to when, if people are taking loans out, there's something that I've had to help a close friend out with recently. If you're taking out loans, if you've got debt, look at the interest rate of what you're paying, not the amount that you owe. the interest rate, because you can have something that's £100 or £1,000, and if the £1,000 is like 1% and the £100 is 25%, like that £100 will actually kick you in the ass a lot more. So always make sure you're looking at interest rates. Like people don't seem to figure that out, and it really stings when it comes to debt.
And when it comes to personal loans, it's always worth looking at right at the bottom where it says total you pay back, and that will generally give you a guide of, okay, I've borrowed £10,000, but I pay back 11,200. Effectively, it's cost you 1,200 quid for that £10,000, and that's something I've noticed online. Again, looking at it with a client, where they were looking at a car loan, it actually is beneficial sometimes not to borrow the smaller amounts. It's crazy, I know, but borrowing £100 will cost them a lot more than say £10,000. It's crazy, but effectively it does because of the way the rates work.
So let's say, for example, hypothetically, if I need to borrow £5,000, I'm better off getting a loan for £10,000.
Not always. So different banks will offer different rates for £5,000, £10,000. But again, I always look at the total to pay, especially when it comes to personal loans. They're not tied to any asset specifically. They're just literally given to you to do what you wish. With, buy some new microphones, because I've nearly broken this one.
These are new microphones. This one I got today as well. So
a laptop, for example. So I tell people, don't get too hung up on the interest rate. Always look at the total you pay back when it comes to personal loans. But mortgages, you're always reviewing them periodically, 2, 3 or 5 years, because that tends to be the fixed rate periods that are available in the UK.
Perfect. That's again, people just don't understand these things. Even when it comes to loans, I know the loans isn't your speciality, but people get stung with loans.
Yeah.
And they get loans and credit cards to pay things off, and before they know it, they're in this mountain of debt. They can't figure out why. And it's because the APR, the interest, all this stuff.
All the big words
they
don't understand. Yeah, I always go, don't worry about the APR and all that nonsense. Look at the amount you're going to pay back over that 2-year period on a personal loan, for example. When it comes to a mortgage, always speak to a good advisor and look at what you're going to pay over the next 2 years, 3 years or 5 years, because that's the only thing you can really control, because that's what you're going to sign up for. Because the government could, or the Bank of England could decide to move rates around, or we could have an episode like we did last September where the government came out with some crazy things and the markets reacted, which meant interest rates went up. That's pretty much it.
You went into the next word. No, you didn't. You kind of linked in inflation. So we've got interest rates. I know we're going to talk too much on inflation because that could be a whole podcast by itself. But interest rates and inflation are two buzzwords that are flying around at the moment. So talk to me. What is inflation?
So inflation, quite simply, is the rise of prices of goods and services is the best way to keep it and simplify it for clients. It's the amount you pay for bread, gas, utilities, water across a period of time. And like we all know, it's like a cup of coffee now on average is about £3.50. Probably 10 years ago, it's probably £2. So that's just pretty much inflation, the cost of goods and services rising over time.
And that's what kind of screws people up, because inflation goes up and the wages doesn't really match it.
So when you hear our parents' generation say, I pick on the boomer generation because my dad's 70 now, but they always think, the pound isn't worth as much as it used to be. Now, that's purely down to inflation. And there's nothing you or I can do or the public can do to control that. It's down to the banks, the central banks and the government to sort of take charge of.
Is there anything people need to worry about when it comes to interest rates or inflation, apart from what we just covered? Is there anything when it comes to mortgages? Do people need to? Because again, you're hearing all the time inflation going up, interest rates. And again, I know, it's fear mongering. I know that. This is why, from a very practical point of view, when it comes to mortgages or any sort of financial stuff, should people be worried about the state of interest rates and inflation right now?
No. So I spoke to a first-time buyer today. Their rent is going to jump up to about, I think, £2,000 a month, and they're just stomach turning and thinking, hold on a minute, our mortgage will be £1,200. So for first-time buyers, the actual interest rate right now isn't really a challenge. Who are the clients I'm finding who are most concerned about interest rates are those people in their 50s that have been paying 1% for probably the past 10 years, 2%, and now they're thinking, bugger, 4.5%. We don't want to pay this. It's not that clients can't pay it and people can't pay it. It's more the willingness, thinking, I've had it really cheap for like 10 years. And now it's going to go up. And when it comes to interest rates, I wouldn't overly be worried because they can drop. But at the moment, we're on an upwards cycle at the moment because of just everything going on in the world.
So you think it will come back down?
I don't think it will come down as much as people think. There's a lot of experts out there saying, we'll see 2% interest rates again. I think 4s and 5s will probably be the new norms, potentially. If it drops below that, I'll be happy because it's better for me because I can help more clients and it's cheaper. But the thing I would say to clients is don't get too hung up on an interest rate because if you're renting and your landlord's giving you notice and you're looking to buy, you don't really have a choice in what rates are available. It's whatever's best for your circumstances. So
before we go into cost of living, that's where I'm going to go. I want to go back to what we were talking about before, like loop it back around again, talking about like first-time buyers, self-employed now. 100%. Again, people listening to this, you may not be self-employed or a first-time buyer, but you may know someone that is. So again, if you're taking value from this, don't forget to like and share it with a friend so we can help people, which is the whole point of this podcast. So let's say I'm a first-time buyer, I'm self-employed. Can you give me some actionable steps that I need to take? Like almost like an action plan for people that listen to this. I've got no clue. So we're talking to people that have got no idea. As you said, self-employed, got no idea. So the first thing they've got to do, you've already said, speak to your accountant.
Speak to your accountant.
Then what?
And then get your tax returns, or as what people call them, tax calculations. So that if you're a sole trader, you need to look at your net profit. I have this argument with friends of mine who are joiners. They're like, oh, Imran, I've done £40,000 this year. I'm like, have you really though? That's the turnover, not the actual net profit, because they may have a van, there could be an electrician where they've bought tools, or saws if they're a joiner. They take that all away as a cost and they're left with maybe 25,000. That's the net profit if you're a sole trader. Mortgage lenders will work off your net profit, and for most lenders, they'll work off the last 2 years. So we tend to see this quite a lot where the tax-free allowance is like 12,500 and a few pounds at the moment. So accountants or clients will put through £12,500 as their income, and then the following year when they need to buy a house, all of a sudden the income's 35,000. But lenders are going to average that. Mm-hmm. So it's not as if, they'll all use the latest year. There are a handful of lenders who will use the latest year, but the majority of high street lenders will use an average. It's just because they like to see a stability of income. Mm-hmm. If you're a limited company director, which is becoming more and more common now for personal trainers, joiners, and any other profession really, just because of the tax benefits long term, lenders will use 3 elements of your income: salary and dividends if you take them out, or there's a handful of lenders that will use salary and retained profit. So this is why speaking to an advisor early on, maybe 18 months before you're thinking about buying, and your accountant up front is worthwhile.
What are those 3 things you just discussed? So salary, dividends, retained profit. What are those 3 things?
So salary is pretty much what you draw out each month. If you're a limited company director, it could be £800 a month. Let's say you get £10,000 as a salary, but then your company makes profit, and then you take out a dividend at the end of the year of say 25,000. The lender would then use the 20,000 dividend and also the salary you've drawn of say 10,000. Mm-hmm. So effectively you're borrowing using £30,000. Mm-hmm. But there are some who are really fortunate who have an amazing business from year one, and they sit there with their accountant and think, bugger, if I take a dividend, I'm going to pay X amount in tax. If I leave it in the business, it's in the business. But there are a handful of lenders who will say, oh, you've got £100,000 worth of profit, which you've left in the business. We'll use that because, Dan, you could have taken that as a dividend, but you didn't. So we'll use that as your...
So that's why you've got to get advised with this to make sure you go into the right companies that aren't going to kind of essentially screw you over, essentially. My way of kind of imagining using this is there's a minefield, and basically you want someone to kind of guide you through what's going on here.
100%. Like I spoke to a client this morning who's looking to use retained profit, but they'd gone to their bank and the bank would only use salary or dividends. They won't use retained profits. So they're thinking, I can't get a mortgage. I'm sat there thinking, well, actually, do you have any retained profit? Like, oh, yeah, we have. They're a company that sells glassware. And I'm like, oh, how much retained profit? I was like, oh, gosh, okay, you can borrow a lot more. They didn't know until they actually reached out and spoke to someone. So when you go to your bank, they can only advise you on their current product offering. So if you speak to an advisor who's got access to multiple lenders, they've got options for you. And it costs you nothing. That's one thing I want people to understand. It costs you nothing to speak to an advisor. Whereas there seems to be a misconception that it's going to cost us money.
So if I want to chat to you...
It's free.
Free?
Yeah.
What costs me money to talk to you? Like, so at what point? Because with this, it's like sometimes it's too good to be true. So for me, again, I know you're a very open, honest person, which is why we're having this conversation. Like, that's why I wanted to talk to you, because 100%. You are real and raw, and that's exactly 100%. What I like. So again, my conception is it costs money to talk to you. So it's completely free. At what point do I have to pay you? What is your actual job?
Yeah, so...
so I'm talking to you.
You tell Kate you sorted all that, Dan.
So I'm talking to you for free. Yeah. What do you give me for that versus then what costs me money?
I hold your hand, give you a back massage. No, I'm joking. I don't give you a back massage. I'm there to be your sounding board and give you advice around what we can do to get you a mortgage. The only time I charge a fee is when you're physically given a mortgage by the lender on the property you're buying. Some advisors out there, some of the corporate-based advisors will charge you on an application to a lender. So a lot of advisors do charge fees, but it could be at a varying point. So some will charge on application because they've done a load of work, and some will charge it on offer. I like to just leave it as late as I can, because the way I see it, you're going to get a mortgage if we've done everything properly. And
so if you do your job, you will get paid. Which again, and I like that. That's what this one to get over, because people in my head are like, so it's free. What's the catch? So straight away, people are like, so wait, this guy's going to get me a mortgage for free. What's the catch? Well, the catch is you get paid once you've got the mortgage, which is fundamentally what the person wants in the first place. So that's why I said, like, what do you do? Is because people hear this and be skeptical. So people are going to help me for free to get this mortgage, which I can't get.
Yeah, it's why I set on my own business at the end of 2016, because the corporate I worked for, they would charge you on application. And I'd sit there and think, oh, hold on. Imagine the lender declines that case. That client's out of pocket by 500 quid. You know,
And it goes to someone else, another 500. So they're already $1.5 down.
Yeah.
Where they've saved so hard to get a deposit.
Yeah,
and then they're down $1.5 before they've even got close to your mortgage.
And if they're going to a different lender, I just think, well, let's just go apply for a mortgage. When you get it, you'll happily pay me then. So let's just do it then.
So we've covered go and speak to the accountant first of all.
Yeah. Especially as an entrepreneur or a self-employed person, speak to your accountant, get them on board. And if they're not getting on board, I say this, get another accountant.
Get an accountant, yeah. Some good accountants out there.
And they don't cost as much as people think either. No. Because there's a lot of chartered accountants out there who don't charge the earth. Whereas the perception, I had the perception of, God, this is going to cost a lot of money to speak to an accountant. It actually doesn't.
No. The best advice I can give anybody who's in business is get a good accountant. It literally changed my life. Like when it comes to, again, been self-employed for 12 years. My business was nowhere near as successful as it was, so I got a good accountant that actually explained this stuff to me. So they've done that. Second part was
speak to me,
speak to you, and then from there, what they need to do? So they speak to you, and then what's the conversation?
So we then put a plan in place. So, for example, a friend of mine who's self-employed, he wants to buy a house around here, and obviously they cost quite a bit more around here, and they need to save a bit more money. So for them, they wanted to put down 5% deposit, but because of profile, they're actually thinking, oh, hold on, we'll save for another 12 months, and now we'll put 10% down. Because that's something I always look at with clients. Okay, you've got a deposit saved, it's 5%. Actually, would you be better off waiting 12 months and maybe living at home or maybe renting, continue renting, have a bigger deposit to bring your potential monthly payments down? And that's one thing I always say to my clients. Let's look at the numbers now before we fall in love with the property. Because if you fall in love with something, and we all know if your partner's involved, you're buying that house. By hook or by crook, it's going to have to happen then, because all of a sudden you view this property, you like it, the missus likes it, the kids like it, or your partner likes it, and you're kind of done at that point. So it's worth knowing your numbers before you even start looking at properties.
Because otherwise you then go to a house which you potentially can't afford, and then the whole thing goes downhill, and it's...
And that would be my biggest tip right now to first-time buyers. Just because you can borrow X amount of pounds doesn't mean you have to borrow all of it.
Or you should. You should borrow it. Like, do you mean it's like...
borrow what you need. Yeah. So whenever I speak to clients, I say, we've got an extra borrowing capacity, shall we maximise? I'm like, really? Do you need to? Because the area you're looking in, you can still buy for less. So that's one thing I would say to a lot of my clients: don't over borrow. Leave yourself a bit of room, just in case rates rise again. Is it affordable in 2, 3, or 5 years' time? The good thing is, since 2015, lenders have been stressing mortgage applications at 8%. So we're nowhere near that as a mortgage rate anyway. So the majority of the public can still afford their mortgage unless their circumstances change. And that's when, again, they have to seek help from the current lender.
Can you help with that as well? So like remortgaging and stuff. Like, so we're talking about first-time buyers here. Like, you can help other people that aren't first-time buyers as well.
100%,
But you should enjoy the first-time buyers because you are first-time buyers and self-employed because you are one.
It's more. I find it's more enjoyable because they generally have questions that they think they should know, and it's like, well, no, there are no silly questions. Especially us male species, like we always think, oh, I should know that because Barry down the pub has told me. Actually, it doesn't matter.
Barry down the pub hasn't got a clue.
No. The amount of people I speak to, like, oh yeah, my mate told me this. When did he buy a house? 1980. Oh, okay. Market exchange rate. I wasn't even born.
But I think this is interesting thing when it comes to buying a house, especially if the only people you really talk to about it, let's say you're 18, 19, 20, 21, the only people you may feel comfortable talking to about buying a house could be your parents or people at work that, again, maybe slightly older. So who do you go to? Oh, older people, they've already done it and got a house. And then if they're then telling you, it's like, well, they got a house for 10 grand, you're thinking, what do you mean you bought your house for 10 grand? It's now worth 50,000, or so 500,000. Like, they've done nothing for it. They've done nothing for it. Like, actually, it's gone downhill. Like, the doors are falling off. It's still worth 500,000. But it's completely unrealistic.
Yeah,
so I'm finding, based off that,
I'm finding more and more parents are now starting to reach out to advisors and go, right, we last bought a house in 1989. I'm like, okay, I was a year old then. And then they go, oh, our kids are buying, but they're in their 20s, or we want to give them a deposit, but we don't know what they can borrow. So generally, I'll say, well, look, pop on into the office, or let's just all three of us jump on like a three-way call or a Zoom, and let's just chat about what is possible. Because that's one other tip I can give to first-time buyers is find out what you can borrow, because you'll be surprised at how much willingness there is from parents to help you, or even grandparents.
Just get out of the house.
Maybe, more that. And I'm finding from a lot of the older generation, the grandparents, they would like to see their grandchildren enjoy that inheritance whilst they're here, rather than when they're gone. So
I think it's an interesting thing. People don't have that conversation. Like, they don't talk about it, which is interesting anyway. People don't talk. But actually, as you said, if you're struggling, you just speak to your parents, like, because they may have some money saved up for you, but you haven't asked, they're not going to willingly give it to you.
And if you've done a bit of legwork already, and you go, actually, mum and dad, we can borrow X amount of pounds. If your parents are in a position, they might go, okay, we'll give you a little bit, or we'll pay for your fees, or we'll pay for the furniture when you move in. It's just all about being transparent, and that's why I love what I do, because you generally find a lot of people are quite cagey when it comes to their finances, because some people might feel embarrassed, and I just say there's nothing to be embarrassed about, because whenever I speak to a client, it's confidential. So there's nothing. They don't tell me, then I tell their dad or something. It's between me and the client, so it's fine.
So gone to the accountant, spoke to you, then what do we need to do? Like, we get the
mortgage in principle.
Mortgage in principle.
So if you're eligible at that time to get a mortgage, we'll figure out what you can borrow. You then start house hunting, and that's the fun part.
So when there's mortgage in principle, what do you have to do for that? Like, so, because again, people let's pretend people don't know. So how does this go about? Like,
really
what's
easy.
The process?
So I'll typically ask for just a handful of documents, just a credit file. I would always tell clients, check out your credit profile online. Like the likes of Experian, Equifax will let you run one for free. Just make sure you're on the voters roll. That is the biggest thing. The electoral roll. The amount of young people, me included, that weren't on it at one point, it's unbelievable. And what it can do to your credit profile is amazing, because it'll bump your credit score up, because a lender can associate you to an address. And that helps them, because they can say, oh yeah, Dan lives at this address, or Imran lives here. And it's a lot easier for them to then credit score and be more willing to lend. So at that point, once we know where you're at from a finance perspective, how much deposit you've got, we then go to a lender and get your credit searched to make sure, can you borrow X amount of pounds? And that gives you a budget then overall of what you can afford. It's a boring subject, but I try and speed it up for my clients and say, we're not going to sit here for 3 hours talking about what you can borrow. Let's just find out what you can borrow. And then you can start the fun stuff. Generally, it's the partners that are always on Rightmove finding out.
Before we go there, when it comes to deposit, what roughly do people need to save like now for a deposit? Because I've heard, is it 10%? Is it 20%?
It can be 5%, and there is also lenders now with 100% mortgages, but I'm always like, save some money. I would always encourage clients to save some of their own funds, because it's all well and good having 100% mortgage, but there are so many caveats with those types of products at the moment. I would just say save your money. If it means you're saving for 12 months, that's fine. The average deposit, and this is why I hate averages across the nation, because that includes London. Their house prices are ridiculous. Same with Birmingham, same with other parts like Oxford. It's super expensive now. So the average deposit varies from area to area. It's all about your average house price in that area. So I'd say if you aim for 10% in your local area, you're generally on a good run, unless you've got issues with your credit profile where you might need a bigger deposit.
So worse credit score, more deposit.
Yeah. Because lenders assess the risk and go, okay, you've had a blip. Like a parking ticket is the biggest one. City council, they'll fine you for driving anywhere at the moment, and you don't pay it out of principle. You end up with a county court judgment then, and then all of a sudden you're in that spiral of
for 6 years. Yeah.
And it's just a nightmare. And I always say to younger, the siblings of my friends, like, look, pay your bloody parking ticket. It's 30 quid. Just pay it.
Just pay it. Yeah.
Just pay it. You're not worth it. My dad was driving in the bus lane a week ago, so he got a ticket. He's like, I ain't gonna pay it. I'm like, Dad, just pay it.
Just pay it. Just get it done.
It's just a nightmare trying to argue. Same with utilities. If you don't pay those on time, it's a big no for lenders, because they sit there and think, oh, you've not paid your water bill. You need water to survive. Why have you not paid it? And same with gas and electric. As much as I hate what we're having to pay for gas and electric,
we'll talk about that towards the end. Like, cause we're on the roll with the mortgages. I want to do the cost of living first, but actually we're on the roll with the mortgage, so we're going to go with this, and I'm going to loop back to that. So now we've got house hunting, found the perfect house, got 10%, let's say 10-15% deposit. Cool, got a house. Then where do we go from there? Because again, this is me being completely ignorant to this. And people are ignorant to this, because they're thinking, oh yeah, between I want to get a house, it's like I want to talk time.
So before you've even gone to view the house, you'll probably speak to an estate agent that will try and sell you everything under the sun, as they do, because they represent the seller, not you as the buyer, and it's just the nature of the beast.
So that's interesting. So again, key point here: the estate agent isn't on your side. They're on the.
Yeah, if you're a seller of a house, estate agent's your best mate, because they're going to get you the best money for your home. So when you're a buyer of a home, you need to have your head on a swivel. And I would always say, speak to your advisor at that time. Possibly put a strategy in place of what you're going to offer. Let's say there's probably no £100,000 properties out there at the moment in Nottinghamshire, but
worth buying.
Yeah, if there is one,
a shed.
A shed. But if there is, you sort of think, okay, it's on the market for 100,000. Do we offer 95 and just test the water? So it's possibly having a plan in place of what you're going to offer. Siblings of mine, friends of mine, their siblings have just gone in and offered asking price. And I've sat there and thought, well, actually, could you've got if you don't ask, you don't get when it comes to properties. So it's always worth putting an offer in. But there are some houses in certain areas that will just demand the price that they're on the market.
That basically goes like if you don't put it in, you're going to lose it.
And a key tip, if you are looking at houses, most people will use Rightmove in England anyway. Click sold prices. It will give you an idea of what they typically sell for. And always look at the last year is always a good indicator, of last 18 months, because that will generally sort of let you know where the market is for those houses.
So bought a house. So we're saying like want this house. Cool. Right, now what do we do? Because I'm sure there's more. Is there more fees that come in? Because at the minute it's cost me nothing.
No. So at that point it's cost you nothing.
No. So because here's where the fees start to come in.
No, they don't.
Not with you, but I mean with the sort of
no, not even then. They shouldn't be.
Okay.
This is where I always tell clients, don't get suckered into paying anything unless you're buying a new build.
Yeah.
Well, they'll typically ask you for a reservation fee because effectively they want you to reserve the plot.
Yeah.
That it's typically between £100, but typically more like £500 to £1,000. Depends on where you are in the country. You'll reserve the plot and then you'll go away and apply for a mortgage. That's when your fees start. So you've made an offer on a property, £100,000, or you've gone back and forth with the estate agent for about a week to get the price you want for the house.
Let's for argument, for money's sake, we'll go
£100,000.
Yeah.
Then you've gone, okay, offer accepted. Imran offers accepted. And it's at that point, if you've not collected all your documents, i.e. you, Dan, if you're not gathered all your documents at that time, that's when you're going to rush around on that weekend gathering everything. Or if you've got a great partner, they'll just sort it out anyway, in your scenario. At that point is when you'll start looking to apply for a mortgage. And this is where the fees will typically start to kick in, because you'll have the solicitors instructed, and solicitors, as we can all agree in this room, they don't work for free.
Yep.
They won't do anything until you pay them for something called local searches when you're buying a house. So that's about £300 to £400. Depends on who the firm is. So that's when you'll start incurring costs. It's a bit of a bizarre system in England because all this money is what you're risking, because a lender might charge you for a valuation. You might pay £100 for them to go out and just value the asset and then come back to you and say it's not worth it, and that's the money you've lost. It's same with the local searches that you pay the solicitor a couple £100 for. If the vendor decides, the seller of the home, that they don't want to sell anymore, you've lost that money.
There's always risk associated.
There's always risk associated.
So some people again are aware of that. So go to solicitors.
Yep.
Get all the documents.
Yep. Apply for a mortgage. So typically, an average to purchase a house in England, it's about 12 weeks. But because of COVID, we're still using that excuse in 2023.
Yeah.
But because of COVID, it's about 14 weeks now, depending on, if the people you're buying off need to sell and if they need to find on. But in most cases, it should be 12 weeks.
And is there anything else in between that time I can do? Do I just sit there and nothing?
So at that point, you need to start packing. But at that time, when we've applied for your mortgage, if the house value's up, the offer's issued, you and your mortgage advisor are best mates at that point, you're thinking, yes, it's all rocking and rolling.
Yeah.
But you're still not effectively buying that house till the vendor gets around the 10-week mark where you exchange contracts. That's when you legally are obliged that you're buying the house. And that's the issue in England, whereas in Scotland it's different. Once you make an offer on a house, you're legally bound to purchase the property. Whereas here, our market is slightly different, where you've got a bit of time and the vendor could pull out. So there's a bit of money on the line, which isn't a bad idea, because it separates the wheat from the chaff, I suppose.
Yeah.
Because if you're not willing to risk that money, you're probably not serious about buying a house.
Mm-hmm. Any problems that you see that occur between these sort of periods and stuff that people can mitigate? Obviously, I know say a lot. Obviously, like when I've got our podcast, but any main ones you see?
No, the main one is typically the type of property. So we've got a lot of older properties, Victorian, Edwardian, that may have issues that may crop up during a survey from a lender. I.e., subsidence is a big one, where the house is sinking slightly. That would mean a lender won't lend in most cases. So then the clients are back to the drawing board to find another property. Or the biggest one is the vendor decides they don't want to sell. And that's when you're back to the drawing board again. But from a buyer's perspective, there's not a lot you can do bar being prepared for a possible pullout from the vendor or a bad survey coming back. And it's just not getting too attached till you're later down the process.
So that can be quite annoying, because if you really got this house, is the dream house. But you said there's nothing you can really do about it.
There's nothing you can really do. I mean, if the survey comes back bad and it's like, actually the house needs a new roof and there's loads of issues with it, do you really want to be buying a money pit? Is that the answer you have to ask yourself? The question you have to ask yourself, like, do I really want to spend thousands getting this house right?
So again, it kind of ties into all the stuff we talk about on the podcast about, again, mindset stuff, again, being aware, control the controllables. So basically, I just want to confirm there that it's actually out of your control. There's nothing you can do in that situation. When it comes, again, actually think, do you want to throw money into a money pit? Is it worth it? Don't get too emotionally involved in it, and actually just take your emotions out of it and think logically, which I think a lot of people struggle with if they love the house.
I mean, don't get me wrong, I'm the same. I'll get a bit emotional about it. Yeah, that's nice. That's a home. I want to be there.
You create a story in your head
about
living there, kids,
that'd be the home
and then it gets taken away from you, and you can try and hold on to that, not realising actually it's going to cost you 50, 60, 70, 80, 90, 100,000 pounds to make it actually livable.
And the surveyors there, they are very much as blunt as they can be, and go, actually, it's not worth the money you're about to pay for this house. And that's generally another issue where you might offer £100,000 on the house. The lender, for example, the mortgage company sends out a surveyor. They turn around and say it's only worth 80,000, Dan, and you're thinking, bugger, I really love this place. But if the vendor can agree and you can come to a compromise, you can still purchase the property but at a reduced price.
Yep.
So that's in the buyer's benefit, I suppose, if it comes slightly lower than you're paying.
But again, still knowing that you can actually do that and you can negotiate as well. Yeah. I think people think it's like I said, the price is the price.
No.
You're going to negotiate.
No. The price is subject to survey, is what I always tell clients. It's just because you've offered 100,000 doesn't mean that that's what the lender's going to say, because effectively it's not our money. Ours is just a deposit. The rest of it's the lenders, so they're going to want to make sure you're not buying a money pit.
Well, that's interesting, isn't it? Like, so again, to actually think about it logically, actually, it's not your money. Like the bank or lender is giving you that money. They want to make sure that actually it's in the best hands possible, and that's basically what you've got to try and do: is essentially convince them that you can pay it and it's in good hands. They're going to actually get the return of the investment, which is fundamentally what they want.
Yeah. And again, they're not there just to say, no, we don't want to lend. They want to lend money. It's how banks make their money, by borrowing it. But they don't want you buying something that's going to cause you a financial detriment as well.
And they cost them more money, because ultimately they want their money. So they're going to give you £100,000 and you can't pay it back. They've lost £100,000. Yeah. Like they want it back.
And that's something that's overlooked, just on sort of digressing slightly on this, but a lot of banks have to earmark that money separately as well. So if they borrow you 100,000, they have to have it as a contingency as well now. Like if we borrow Dan 100 grand, we have to have that set aside just in case you don't pay it back. It's why they ask for so many silly documents in today's market.
To make sure that you are who you say you are and you can afford it.
Yeah. Pre-2014, you could sneeze and the bank would probably give you a mortgage. Whereas now it's a bit, I prefer the system now because it's a lot more safer for the borrower, but also the bank, because they're actually assessing your overall profile.
They're actually looking after the money properly rather than just throwing it out willy-nilly and then bankrupting.
We all know what happened in 2008.
Bankrupting everyone. So hopefully now that's giving people good actual blueprint walkthrough of what to do. And like I said, all your details are in the description below, so make sure you actually hit Imran up if you need his help when it comes to stuff like that. Like I said, I can vouch for him firsthand personally. The guy's absolutely awesome. And again, hopefully you're getting the vibe from what he's talking about as well. Let's talk about cost of living. So digressing a bit, like I said, this is where people really struggle mental health wise. Can you give my audience some tips and tricks about this cost of living? You mentioned utility bills, they're on the rise. There's all stuff going on. What can people actually do?
Practical situations. I mean, the biggest one I found when speaking to a client a couple of weeks ago, and I had to do a little bit of a financial analysis on myself as well, because I love a coffee, and you buy one every morning when you walk past the coffee shop.
So you go get yourself a good. You get the initial, mate. You spend $2,000 on a coffee machine, initial investment, but long term it pays off. I'm telling you.
So most people, on average, will spend more on coffees a month than they will on, like, for example, life insurance, which is crackers. So I looked. If you bought one latte a day, it's about 150 quid a month. If you buy one from Cafe Nero, as an example, that's something people could cut. Maybe go from having a coffee every single day from the coffee shop, maybe to twice a week. Reduce your cost,
or even going from like a latte for a black coffee. Yeah, again, save you £1.50. Sounds stupid, but that £1.50 actually adds up a bit.
Or a Pret subscription. I'm not plugging Pret here, but I seen that on my Facebook adverts, and I was like, oh, Pret, they've got a subscription for coffees. So if you do love a coffee, I think they've got some sort of subscription model. I don't know how good their coffee is. Don't hold me to that, but I've just seen that there are some
that's interesting. Okay,
quirky models out there. Yeah. The other one is subscriptions to services like Netflix, Disney Plus. If you've got kids, you've probably got every subscription service out there. Actually look at what you're using. Prime example, mine, I had everyone going. I probably only use Spotify. And I thought, well, hold on, let's just cancel all that. Keep Amazon Prime if you use it. If you're anything like me, you need something delivered, lastminute.com. It's worthwhile. But it's just getting rid of stuff that you're paying for. Gym memberships is another one. A lot of people will be members of 6-7 different gyms. And you start there thinking, actually, which one do you go to on a regular basis?
And they've got one just in case. It's like, okay, well, if you go there once a month or twice a month, get a day pass. Yeah. That again, it's 20 quid. Yeah. But if the membership's 40 quid, you just save yourself 20 quid. And that sounds silly, but again, we're talking about utility bills. And again, if you can save yourself 100, again, 150, 200 quid a month, That's quite a lot. 'Cause it's interesting you say this because, again, my finances were an absolute mess. I know you've seen my finances, so we're going to keep it quiet. But they're absolutely a mess about 6 years ago, 5-6 years ago. Again, I got myself into a lot of debt. And my biggest thing was I was too afraid to look at my finances. I didn't know. Mate, I remember the point in time where
That's most men, by the way.
Yeah, I literally just prayed when I went out that I had money in my account. Yeah. Prayed. I didn't dare look. And it's only when I actually had an ex-girlfriend of mine really look through and being like, right, this, and then Katie did it again when it came to a business perspective. So again, I did it in personal and then business, right, this, and actually looking at, I didn't realize how many subscriptions I had, these things are going out. And again, because they come out like once a year and they're on renewal, like so you're paying like 350 quid. And I'm there like, you're looking like, what the hell is that? And it's like Windows, whatever it is. I'm like, I don't even use it anymore. It's like I've got a Mac or whatever it is. But you don't realise these massive chunks of money can come out.
Smartphones are a killer for that as well. Like you've got an app. I got one for some subtitling software. I was like, bloody hell, why am I paying for that? It's free now through Instagram. Like, what the hell's going off here? And all of a sudden, you're paying for these things without realising. And like you mentioned, annual renewals, Windows. I paid for something for Microsoft. I was like, I've not used it in 6 years. What the hell's going on? And it's just going through that properly and realising, actually, what have I paid for? What is annual? Do I really use that service anymore? Cancel it.
And also on top of that as well, another key tip that I've learned is if you're doing something for a free trial, set on your calendar when the free trial runs out 3 days before and cancel it, or cancel it as soon as you sign up, because people don't do that and then they get charged. It's like, oh, it's free for the first 3 months and it's £50 a month. And even if you cancel it after that, or they'll be like, oh, I've paid it this month, I'll use it. Don't use it. You don't cancel it, and then next month again.
The biggest one for that is the credit report agencies. They'll be like, oh, it's free for the first 30 days. So whenever I speak to clients, I'm like, make sure you cancel, because it'll cost you 15 quid after the first 30 days.
But again, people are like, oh, it's only 15 quid. Yeah, but you then do that through a year. How much are you spending on these things? So I think, again, you mentioned the guys are bad for it. So again, my personal advice, anyone listening to this, just look at your finances. It is the most, especially if you've got a partner, you should be able to be open and honest with your partner with your finances. If not, then it's another conversation. Or just speak to an advisor, or just someone. You have to be honest. And it is the most uncomfortable stuff I've ever had to do. Like my stomach, I felt sick to my stomach when I was going through it. And it sucks when you realise how much money you've wasted on these things, but you've got to do it.
Yeah, I mean, for a lot of people, it tends to be just silly things like, going out and buying a t-shirt they never wear, but they've spent 70 quid on it. It's like, bloody hell.
Or you wear it once, you don't send it back. Or whatever it is. Like, you don't do that little trick where you wear it and then send it back.
I say that and I've just realised I've got some clothes on the front room table that I need to send back.
I remind you of that. It's like, oh, you said you were going to do that. Is there any other advice? Subscriptions? That's the key thing. If
possible, saving potentially 20%, if possible, of your monthly salary the day you get paid. If you're saving for a deposit, I've seen a couple of my clients do that, and it's helped them no end, because they're still out partying and stuff. You think, bloody hell, how are you saving for a deposit? But actually, the day they get paid, standing order set up.
Because you don't even see it. You don't even see it, so you don't miss it. That is golden.
Straight out.
Yeah. So, and against any business people listen to this, Monzo Business is what I use. Monzo Business is brilliant because as soon as you get paid, you can get the tax automatically come out, so you don't have to worry about the tax, because that was something as a self-employed person that I really worried about. The money comes in straight away. When the money hits your account, it gets siphoned off, and you can set it at 10, 15, 20%, so you don't miss the money. So again, the same thing with that actually is a great point, especially if you know how much you get in each month, straight away, automatic, and it goes. Because I do that, I've got some investment stuff, so as soon as it comes in, it goes. So it goes to another account, so I don't even see it.
Because it tends to be a big question from people who are possibly renting right now and maybe early 20s, like, right, how on earth do we save for a deposit? Because renting at the moment is expensive. I feel everyone's paying because everything's going up. Utilities, gas, electric, rents are going up for a lot of people. So if, even if it's not 20% of your net income, 10, even 5, something is better than nothing, because if it's money you're not effectively, it's not yours, it's sat in a savings account, it's like a rainy day fund. When you do come to look at it, you think, oh bloody hell, where's this money come from? And it's just there because it's silent and it's done on the day you get paid. And I think it takes a bit of discipline. I'm quite bad for it because as soon as you get paid.
But automations though, if you can do it automatically, like you said, set it on direct debit, because this thing, even if you're not saving for a mortgage, people listen to this that maybe aren't listening, maybe listening for your kids or whatever. So you get paid, if you can put money in an account for a rainy day, as you said, that's one of the biggest things to me. Like, because again, MOT, like you've got animals, there's always things that come out. If you've just got a pot of money that just sits there that you do not touch under any circumstances, it just sits there. Honestly, it's the best bit of advice that I was never given. And again, I learned this all through the lockdown when I was really getting my finances in order. When the money comes in, this is what you do. Put a certain amount in savings. And then if you've got enough savings, then you can start to look at investment. But if you haven't got the savings, don't look at investment, because people talk about investments, but you haven't got any savings. Don't worry about investments if you've got some savings.
Like everyone online now on social media is like an investment advisor.
TikTok, talk about this. This we're going to go.
And for that, 90% of the people online aren't even regulated, and most of the regulated advisors won't even be on social media to give investment advice.
Time to actually working, doing the thing they're saying they're going to do.
So I would always say, when it comes to saving, if you've got, one of the best practices I've seen, most people will have 2 current accounts, one that they never use, or they had it when they're at uni and it's student overdraft, for example. Use that as your expenditure account, for example, or the playing account. I've seen one client, young chap, all he does is £200 a month straight in to what he calls the play account. That's the takeaways, that's the going out, and that's the buying clothes for himself. That's it. That's set aside. Everything else pays for the bills, and then he saves. But it takes discipline, like you say, standing order. It's out there, and that's it. As soon as that play money runs out, that's it. He's done for the month. And all of a sudden you realise, you're going out too often. If you're someone that likes to go out every Saturday, do you really need to go out every Saturday? Could you be doing something else?
And this is again, I need to get sponsored by Monzo. I'm not sponsored by Monzo, but Monzo genuinely is a company that changed my life, because each month, and again, I've got a business account and a normal account. You can see where that money goes, so you can see how much you're spending on takeaways, on nights out, on clothes, and it's there. So you can't then. It's like, I don't really spend that much on clothes.
You
realise,
shopping,
$5,000. You're like, what? But and that's the thing. People actually, when you can see the numbers and it's there, you can see how much you're actually spending on coffee, and then or cigarettes or whatever it is. Wow, this is genuinely how much it is. So that becomes cigarettes, because you can actually then create, obviously you've got the normal categories. You can create one. So whenever you go your cigarettes, pop it in, then it's all there for you, so you can see where it goes. And that's what people don't realise. And you can actually set caps for it as well. So if you know that you don't,
what is it, like £20 for a pack of cigarettes now?
Something stupid. Let's say for takeaways, you normally spend £300, but you want to set it at 200. You can then set it. So if you try and buy a takeaway, it stops you. And I think stuff like that is so powerful for the discipline.
And because we're in a convenience era now, people feel hungry, and all of a sudden Just Eat or one of those type of apps is open, and you buy the takeaway, and all of a sudden you think, hold on, I've paid £8 for that food to be delivered. Probably cook at home for that money. I say that, but I do love a takeaway. So do have a takeaway.
Yeah, I say to people, pick and choose your battles. My thing is pick and choose battles. And again, like I said, people say they can't afford coaching, they can't afford this. My biggest thing is the biggest investment you can make is in yourself, whatever that looks like for you. And people don't want to make the sacrifices of, you can't afford for a mortgage. Okay, well, if you're spending £300 a month on takeaways and just rubbish like cigarette or whatever it is, you can save money, and no matter how small it is, it's better to save something than nothing. And that's what, again, people saying it's tight each month. And I know for a lot of people it really genuinely is. And I'm not arguing that at all. I'm not being ignorant to it. But I'm just saying, genuinely actually look at where your money is going, and just ask yourself, if there's a gun to your head and you had to get rid of some of this stuff, I guarantee you could not have that coffee, you could not have that glass of wine, whatever it is. Just start cutting it out, start cooking from home rather than going out.
And the other one I found as well, and it's generally just seeing certain people how they shop, it's not buying the big brands, which I didn't think really mattered much till I looked at my own shopping bill and thought, bloody hell. Buying the in-store brand is a big one, because I think a lot of us can be brand snobs when we're shopping. Bread is bread in most people's cases. The pasta, can you buy a supermarket brand rather than the well-marketed one? Unless you're like gluten-free like my mum, so then it will cost you quite a bit of money. So it's just possibly looking at what you're buying as well within the supermarkets. Maybe buy the offers rather than just buying one item. I'm guilty of that.
Another thing too as well, that is online shop. So again, something we've moved on to is online shopping, because then you don't then get caught in the aisles buying stuff you don't need. You literally only buy what you need to buy, and then the offers are there as well. So actually, you get it there. You don't have to pay for the petrol to go. It sounds silly, but if you've got to drive 15-20 minutes to Asda every week or twice a week, that's money petrol. Whereas actually, if you get it for like a small subscription fee to get it for free, and you can have as many deliveries as you want. That means actually you can get food fresher that comes on regularly, and it saves you money.
Also, look at the reduced aisle as well. There's no shame in doing that. A lot of people, especially men, will think, I don't want to go to reduced aisle. It cramps my style. Just go to it.
No one cares. No
one cares. You're eating it and it's coming out. That's it. It's just
but that's the thing. I think a lot of it, especially comes to men. Again, I know women struggle, but men, a lot of it's ego and it's image.
It is.
And people trying to live that champagne lifestyle on a Budweiser budget. Just understand. You've got a Budweiser budget. There's no shame in that. You ain't going to have a champagne budget unless you actually identify why you've got a Budweiser budget. Just identify. Just live where you are. And like you said there, when it comes to social media and TikTok, people are only showing you what they want to see.
Yeah,
it'd be very easy for me to get into a nice suit, go to my friend's house who's got the brand new Aston Martin, sit there, take a few photos, wouldn't it, Katie? A few photos by his car, claim it's my car, go be in his pool, claim it's my pool, post on social media and people that don't know me be like, oh wow, this guy's really successful. I start giving advice, it's a load of rubbish, and I'm making money off your ignorance.
Massively, and it's one of the reasons I didn't wear a suit today's podcast, because I just thought it's a relaxed atmosphere.
We didn't wear a suit when I met you the first time.
It's just since lockdown I've just wound it down. Like, do I really need to wear a suit? You know,
I think it makes you more relatable though.
Yeah,
and the whole point of this podcast, the reason I got you on is because you are a relatable person, and hopefully the way, again, getting close to wrapping up now, like people listen to this, like you are a relatable person, like it's been no nonsense.
Yeah, I don't beat around the bush is what a lot of my clients say. I kind of just grab the subject.
But that's what people want. People want, at the end of the day,
it's an uncomfortable conversation.
People are coming to you because they want a mortgage.
Yeah, 100%.
Do you want to start giving them a back massage or foot massage, or just want to say to them, you can't afford this?
Yeah. And that's the way I've had to be, because I found when I first started doing what I was doing, it was a bit soft. Oh yeah, no problem. Yeah. And then all of a sudden I'm like, nah, we ain't got time for that.
Ultimately, you don't get paid.
Yeah,
let's be honest.
100%.
Like, and this is what people don't seem to understand. This. I say to personal training clients or whatever it is. Listen, you're coming to me for a job, like to do a job. The way my business works is I do what I say I'm going to do, and then you tell everyone how amazing I am. There's no point in me lying to you and saying, oh, I can do this when I can't. Yeah. Same with you. Like, you want to get paid. You get paid once it's done.
Yeah. And generally, you'll find with that conversation is men that don't like being told when they're wrong or what they need to do.
Or they can't afford something.
Yeah.
Because again, ego, like
100%.
In front of their wife or partner, it's like, you can't afford this. Well, okay, so why can't you afford it? Is there something you can do about this? Do you have to wait another 12 months? Okay, is it not better to wait 12 months and get what you can actually afford?
And we're in that sort of instant gratification era as well. Social media, click it now and it will happen. Like, you know.
I call it the Tinder culture.
Yeah, swipe right.
Yeah, swipe right, and that's it. Like,
swipe right on that.
Yeah.
And it's something we have to kind of get away from now, because, you know, we are in a sort of situation where living in general for a lot of people is becoming a bit of a struggle, and it's becoming really expensive. So don't fall for the crap you see on social media, where, I mean, I've had people call my phone and I've seen them on social media, they've got millions of followers. I'm sat there thinking, the guy that's not even on social media has got a bigger deposit. So what's all this social media stuff for? You know, and it's just living a simpler life for a lot of people, you know. Yeah. Like you said, let's go do those photos in front of the Aston Martin then.
Yeah, but that's the thing. I find it just so crazy when people just live in this fantasy world, this complete lie. It's like, you know, especially when it comes to finance, people giving financial advice and stuff. That's like, you literally could ruin someone's life right now.
100%.
Again, talk about crypto, all the
Forex traders.
Yeah, and it's just like, wow. It's like people need to wise up to stuff. If it's too good to be true, when it comes to finances, if it's too good to be true, it normally is, and there's a reason why it's too good to be true.
And most of them won't write down what they're telling you, and that's the thing. I always say to clients, when, you know, people are like, oh, we can do this, I'm like, get it in writing. Can they do it?
Yeah, words are empty. Final point, I normally say is when it comes to mental health or to think financially, what advice would you give to someone right now that does feel a bit stuck and out of control with their finances?
Get help. Reach out to someone. Yeah, there's no shame in doing it. There's also, you know, there's advisors. There's also the Citizens Advice Bureau, who also help people. There's also the Money Advice Service that you can reach out to as well, who are free of charge to reach out to if you really feel like you need help and you've got nowhere to turn to, or just reach out to me and I can point you in the direction of people who may be able to help.
Can you give me all the details for the people that you've mentioned down below? So I'll link them all in the show notes. Again, if you're on YouTube, Spotify, or Apple Podcast, it'll be down there for you as well. Don't forget to like and share this episode with a friend. Imran, where can people find out more information about you? So obviously we're going to put your contact details below, like through your email and stuff, but you've got social media.
Yeah, I'm on social media. The company, the Harmony Financial Services, just Google us and we're there, and I'll give you the links to share with clients, and just drop us a DM if you have to. I tend to get a lot of DMs from clients or voice notes, and I'm always happy to speak to anyone that just needs guidance or pointing in the right direction. No problem.
And I said I'm not getting any kickback from Imran at all, but genuinely used him personally. Very, very, very good guy. So I've got him on the podcast. It's not in my best interest to recommend someone to you that is rubbish. And again, if you don't want to use Imran, that's absolutely fine. But use other people. Just get that help, get that advice. There's no shame in getting some guidance in this to actually help you navigate this sort of minefield that we find ourselves in. Imran, thank you very much for your time today. It's been absolutely awesome.